All right, everybody, thanks a lot for joining me as at this Tuesday afternoon market recap. Right now, we have approximately 20 minutes left in today's session. However, the candlesticks are very, very important to understand. It's something that I began mentioning yesterday publicly here on the YouTube channel. We've been speaking about it for a number of weeks over in that pro analysis class. Largely what we have been looking for are long lower wicks mixed with white real body candlesticks showing us or indicating to us that these areas of support are looking to hold. And essentially today, the print on the candlesticks collectively across the board, not only on the Dow Jones Industrial Average, but also very importantly on the S&P 500 and the NASDAQ, are certainly supporting our analysis and our outlook moving forward. So I just wanted to give you an update exactly what is going on. As you can see here on the Dow Jones Industrial Average, we started off this session incredibly weak. We saw a big gap to the downside. This is the close as at Monday. This is the open on Tuesday, and immediately we began selling off. In fact, we cracked 25,000 very early on in the day, and it was really about mid-morning where we began to bottom and then base. Now, once we based, we've seen a bid enter the market, and this is showing up again right at this critical area of support. Not only is it making sense at horizontal support, but it's also making a lot of sense off from the 2018 calendar lows. As you can see, I've been speaking about this on the YouTube update, and essentially what we're doing right now is we're making that next, or at least establishing that next consecutive higher low, which again is the textbook definition of a bullish trend. So there's a very good chance right now that across the board on the markets, we are pricing in potentially that of an intermediate base that may have actually print the low as at today's candlestick. But what you need to remain, aware of is that, look, we are in the midst of earnings season. Today wasn't the most, or at least the busiest day. This coming Thursday is when the majority of our stocks in our top 12 individual trade list report. So at best, at the moment, you could begin thinking about, or at least nibbling on, some potential bullish directional calls, whether it's through the diamonds, the SPYs, or even the Qs. It makes a lot of sense, and the target is going to be, and this is probably going to remain a target for the majority of 2018, all the way back up at past resistance areas, i.e. the past all-time highs that we established on the Dow back in the early period of October. That is essentially the trade play out. What could also happen is that we could again see a bit of lingering around this 25,000 handle on the Dow Jones Industrial Average. That would make a lot of sense. But given today's candlestick, it is telling us that one, sentiment is beginning to shift. Active market participants are recognizing this, and institutional investors are most likely buying this market right around the logical support area that, again, we've identified and we've been speaking about, and we're looking to act on ourselves as well. So I wanted to put that out there on the industrial average. Also, while I have your attention, I would encourage you to jump into that Pivot Point Pro analysis class. Again, it goes into detailed analysis of our top 12 individual trade list, and also, when appropriate, we will set up trades on the market indices as well in much, much more detail. Now, here's the chart again of the S&P 500. This is that secondary exhaustion wave that was really yesterday's market update title. And this is exactly what we spoke about in yesterday's video. Again, the market selling off back down to roughly 2,700, down to 2,675. We got roughly midway there. But again, you can see this green rectangular box that we drew yesterday. This is coinciding with that long lower wick. And again, a real white body candlestick. We got the original gap down, the big sell to enter the market. We did see a continuation of that for a couple of hours into today's session. However, once again, we stabilized, we reversed, and the bid entered the market, and we actually pushed off from these intra-session and intra-month lows very, very aggressively. And we're almost coming back on up to close very close to where we closed yesterday. So a very strong candlestick here, a big turnaround in the markets themselves, right at a logical area of support. I was looking for the S&P to ultimately come down to roughly 2,700, again a logical area of horizontal support. However, the big distinction is that we don't really have a decelerating fan line like we have on the industrial average, and also that of the NASDAQ, which is a pretty decent segue to come back into the NASDAQ. And really, again, what we've been speaking about in this particular market is essentially this little rising triangle. And it's not really a rising triangle as in prices ping-ponging back and forth, but it's a general vicinity of macro support or intermediate support where it makes a lot of sense as to where the market would stabilize. And again, today, this is now the second push within the confines, or at least the perimeters of that accelerating triangle. And again, for the second time, we're holding it as an area of support. So a very strong white candlestick. We're still down as I sit down and bring you this Tuesday afternoon market recap, but all things considered, these are very strong bullish reversal candles. If you have a look at the oscillators, they're still not all there, especially the MACD. So I am potentially expecting a little bit of a slowdown again, a continued sort of lingering around this area, but ultimately we shouldn't really see these lows taken out. You can really, write that down and say it would be surprising more or less to see these lows taken out. Also yesterday we spoke about somewhat pseudo hammer candlesticks at support. We haven't really seen true hammers set up on the Dow, the S&P, or the NASDAQ, but we do have very, very strong reversal candlesticks, as I've already walked through. If I bring up the Russell 2000, surprise, surprise, here is that hammer candlestick. So right on the confluence of support, the decelerating fan line mixed with horizontal support at our secondary target. So the original short on the Russell, few people took the trade, not everyone, but a few did, was below 1,660. First target was 1,608, and ultimately we've hit our second target down here at 1,519. I'm assuming that this move now is done. It's finished. You should be out of any existing shorts right now. And again, we're looking to navigate through earnings season, or at least this week's worth of earnings, because it affects our top 12 list the most. Once we get through this week, we're in the clear more or less, apart from 2 or 3 other stocks. But again, it opens up the portal for the share market to go from roughly 1,500 on the Russell all the way back up to 1,700, but then ultimately to overshoot and take out the all-time highs, leading into the back end of August into the early period of September. All right, just a couple of months ago. So that's the structures, or at least the outlook that we're sort of looking to move in conjunction with. If I bring up the Dow Jones Transportational Average, surprise, surprise, let me ask you the question, even though I cannot really gauge a response at the moment. I'll ask you, what is this candlestick? And the answer to that question, once again, is that hammer at a support area. Support area that takes us all the way back to really the majority of 2018. Pay attention to this critical area. It's coming in just above 10,000 on the transportational average. We've retested this a number of times. I believe now this is about the 6th occasion. Let me just count them. 1, 2, 3, 4, almost a 5th here, and now a 6th here in the month of October. So a very strong support area after pulling back from roughly 11,500. Here we are stabilizing at 10,000. This to me looks like that intermediate bottom, even though we have overshot this decelerating fan line, or accelerating fan line in this particular instance. And again, now you're going to see the sentiment begin to shift potentially fast. However, I think it's going to be a little bit slower. And ultimately, we're going to see higher prices into the back end of 2018. I'm not going to go through individual stocks at the moment. Again, once we navigate through Thursday, okay, we'll definitely speak about it, obviously, over the weekend in that pro analysis class. And again, finally, I would encourage those people who are listening, following along with the analysis, and are seeing the movements of the market in this channel or on this channel before they occur, to actually jump on in and listen to those analysis that we perform in our top 12 individual trade list. Very important, and I believe you will learn a lot out of it when it comes to understanding the market and trading the market moving forward. So that's going to do us as at this Tuesday afternoon market recap. I wish you all a very nice Tuesday evening. I'll be back with you later in the week to update you on some of the earnings, and also look forward to seeing you on Saturday again. All the best, everyone. James signing off on behalf of Pivot Point Trading. Goodbye.